Hello, everybody. This is Toni Turner, and welcome to the Market Now on Friday, February 21st, right at the market's close. Well, Wall Street's main indexes were set for weekly declines today as fresh data painted a weak picture for the American economy, while United Health dropped after a report that the U.S. Justice Department is investigating the healthcare conglomerate. Data published by S&P Global showed U.S. business activity slowed in February amid mounting fears over tariffs on imports and deep cuts in federal government spending. And on that cheerful note, let's go on to three charts that could give us some insight into the week to come. First of all, as we always do, we're going to look at a daily chart of the S&P 500 SPDR, symbol SPY. This is the exchange-traded fund that closely follows our benchmark S&P 500 index. Now today we can see right here that the SPY closed at $599.94, just below its record, and this was only this past Wednesday of this week, just below its recent all-time closing high on February 19th at $612. Right here at $612.93. Now we know that if you look left on this chart, you can see, we know that since the SPY has gone from walking up its 20-day moving average, and it's done that, it's not on this chart, but it's done that for most of the time since November of 2023. And you know what? Since the November 2023, up to the present time, we have a gain of 66%. So we can't really complain too much here. I think we're due here for maybe a little pullback. And you know, if markets don't go, if markets don't go down, then they can't go up. And the markets of industrialized nations move in cycles. So we want to keep that in mind. So 66% in 2 years is not anything to worry about. Looking back to December now, let's look back to December here. We can see where the SPY touched a new all-time closing high, and that was that little green candle right there on December 6th, and that was at $607.81. Then it dove hard on this day, December 18th, it dove down to something about the Fed that I won't go into, dove down to $585.89, held up for a day, and then gapped down here on December 20th to $580.91. Then it rallied back up to the 20-day moving average, the green line you see, or the red line you see here, back up to the 20-day, to $601.34, couldn't get over it. Notice how these moving averages will act as support when price is above them, or can act as support, and then act as resistance once price gets below them. So it rallied, again, it rallied back up to the 20-day to $601.34, couldn't get over it, fell back down through the 50-day moving average, down to 580, held there, then that went up to 600, then fell to the January 13th low down here at $575.35, then rebounded back up, crossed the 20-day, past the 50-day, the green line, and consolidated along the 50-day moving average, not the neatest pattern I've ever seen, but not too bad either. Consolidated along the 50-day through the end of January, into February, and then flew up to the recent all-time high, closing high I just told you about at $619.23, and then of course rolled over and fell where it is today at our $599.94. So we look at this and we say, what do we do with this next week? Well, what I would do here is I would draw a resistance line and now draw a potential ceiling here. We can draw it here at 614. I think that'll be fine. 614 is a good resistance point here. And then we can look down here. There's already the SPY fell through the 20-day moving average today. So we're down here at the 50-day potential support here, very, very close. 50 days coming in here at $599.18. So if it does move below that, we do have potential price support down here at $590. We have the December lows down here at right down here at $580, $581. We have the right there, okay. Then we have the January low down here at $575. Then we have potential support at October lows at $568, which coincidentally line up with the 200-day moving average at $568. Many times if you have moving average support and price support, that will be effective. We'll have to see. But as you can see, we have all kinds of potential price support here should the SPY need to go lower. So please know, guys, again, the market's been basically moving up for 2 years. If I showed you a monthly chart of the S&P, the SPY here, you would see that in a monthly chart, the SPY basically did this for the year of 2024. It did that. So we know, again, that markets move in cycles. If they don't go down, they can't go up. So please know that a pullback is not, as long as you're ready for it, maybe take a little profits here and keep an eye and set up your protective stops. It's a natural, normal thing for the market to do. Please know that next week NVIDIA's earnings are coming out on Wednesday. That will be something, so we do want to keep an eye on that. Our next chart today is a daily chart of the Invesco QQQ, symbol QQQ. Of course, this is the ETF that follows our NASDAQ 100, the top 100 non-financial stocks in the stock market, and that includes the large cap momentum stocks like NVIDIA, Meta, Alphabet, Tesla, that whole group. Now, today we can see that the Qs closed at $526.08. Now that's just below the all-time closing high, which for the Qs was on this past Wednesday as well, February 19th, at $539.52. It made it back up to this was the prior high here at $538. So it's just a teeny bit above that. Now we know that since the September lows back here, September 24 lows, at 448. The Qs have really, they rallied off those lows. And again, for most of the last 2 years, the Qs have been trading above their 20-day, the red line moving average. The Qs rallied up from those September lows, and we had little August lows before that. But for the most part here, it's walking up that 20-day moving average. Really, really nothing to complain about. Tech has been great. It doesn't mean it's can't have a pullback, because that's a natural, normal way of things. But it seems like in the last couple of years, nobody's used to that. So at any rate, since those lows at 448, the Qs made a nice uptrend here up to 538. That was an all-time high. Then we saw the fall to the 50-day moving average, to the green line down here, to 509. Then a rally to 531. Then down the 50-day down to 506. We got that. Then rally and fall to the January. We rallied up, then fell down to the January low at $499.70. Make it 500 to be easy. Then rallied up to 533. Look at this rally up, then gap down, which happens. It came down here down to 510. Then rallied up again and basically did a nice little stair-step climb here up to the all-time highs I told you about on February 19th at 539.52, and then dropped down to today's low at 526.08. So seeing this whole pattern here, the way it is kind of a lot of gaps in it, a lot of, gee, what do we do next? A lot of gap up, fall down at the close, gap down, move back up, back down, back up. I can see here, and with everything that's going on, certainly the world's got a lot going on in it right now. I can see, and after again the last 2 years of really positive growth, I can see that the Qs may need here to have a little pullback. I'm not saying it'll happen, just saying that I wouldn't doubt it. So what do we have here? Let's call resistance here at 540. We have potential price support here at $523.65. The Qs already fell below their 20-day here, just a few cents. So the 50-day here is at $523.65. We have, again, potential support down here at 510. That's price support, okay, at 510. We have the January lows down here at 500. And we have the 200-day moving average down here at 489.93. We can call that 490 if we want. And the October lows down here at 584. If I can draw that straight line. Maybe not. That's close. So again, a lot of potential support here. Now, if we were to draw a line, but these lines in here are going to be too short to draw. We said the triangle might break. We talked about that last week, and it kind of looks like it might here, but I still don't think we shouldn't see much more than maybe a pullback here. Doesn't mean it's going to be a correction. Doesn't mean it's going to be down 10%. But we do need to be wise here. So again, next week should be interesting. Please trade wisely, and again, keep an eye on your protective stops. Our final chart today is a daily chart of the Consumer Staples Select Sector Fund ETF, the XLP. It has 38 stocks in it, including Costco, Walmart, Procter & Gamble, Coca-Cola, Philip Morris. Now, the good thing about ETFs is they're not as rambunctious as single stocks, but the good thing about them is if one of them has problem with earnings, some of the other ones that are strong will hold it up if that's the direction it's headed. So, and also right now, if we are going to do a pullback here, I'd rather be in food stocks and healthcare stocks. If tech's going to roll over, I'd rather take my profits with technology and then let it go for a week or two and get into healthcare and the things human beings have to have. Those are staples. Those make up the Staples Select Sector Fund. So when I captured this chart today, the XLP was trading at $82.18. That's where it closed today. Now, it actually made an all-time high back here in September. That was 2024, of course, up here at 84. Then it fell from there and gradually moved down here to an October low down here at 80. Then it moved back up to 83. Then down to November lows down here, and you can see it fell to at 79. It fell to 79, rallied up, tried to get through the 20-day, couldn't do it, 20 days falling overhead, came back down and tested that 79 again. Price likes to retest where it's been, then moved back up here, rallied to 83, back up here to 83, then rolled over, and while all the tech stocks and everything were moving higher earlier, healthcare and staples were moving lower because money was going into technology, so it makes sense. This doesn't mimic the S&P 500. Consumer staples doesn't do that. This is the other side of the coin. So these are things we have to have, not things we may have in the future. So it went down here and fell down to its January lows at $75.80. Then, as people started saying, whoa, tech stocks are going sideways, money started coming in to the XLP, and we kind of did the same thing. Again, consumer staples are a defensive play, and we've been dabbling in healthcare for the past, 3-4 weeks. And last week, I even talked about emerging markets, which is, certainly doesn't look like this. And emerging markets went higher. We had a nice trade on that. Now we're back here to looking at the XLP, we see The price moved down to those January lows, then gapped up here, moved back up above its 20-day moving average, which is inverse to the other two because of the fall. It marched around sideways here into February, then started climbing right just around 79, started climbing up, moved through the 50-day, moved through the 100-day, came up here pretty dramatically. And I could see this pulling back a little bit before it goes higher here. So not saying you need to buy it right here, but if you have to buy something, maybe keep an eye on this. If in the coming week the XLP can stay above the 50-day moving average, which again is the green line coming in at $79.36, if it stays above this green line, I may buy a small position in my trading portfolio. I'd like it to move down a little bit here. Don't know if it'll do that or not, but I may buy a small position of the XLP in my trading portfolio with a stop below the 50-day moving average at $78.50. If and when the XLP can move above 83.50, I may add to my position, and by then my stop will be a trailing stop. So you may want to keep an eye on the XLP in the coming week. And now, please know that at ToniTurner.com, we've lowered the price of all of our online training programs to make them more accessible to everyone. So if you'd like to become a more profitable trader, now is a great time to check out my timeless training programs. How to swing trade successfully. This is one of our most popular products. How to swing trade successfully is one of our most popular programs, and for good reason. It can earn you profits in almost any market. Swing trades have a time frame of 3 to 5 to 7 days. It's just, and as I always tell you guys, it is you're looking at a daily chart here of a stock in an up trade. What you do with a swing trade is your goal is, as I always say, is to take the center out of the aureole. Okay? You wait for it to break out with a certain setup, and I will give you that setup. You grab these profits, and if it looks like it's coming down, you get out and get the profits. You're going to learn how to trade my powerful sleeping tiger setup that I've taught to thousands of traders, and I use it to trade myself all the time. You will discover exactly where and when to enter your trades and how to take the best profits from price upswings. Our new low price for this program is only $187. You ought to be able to make that back pretty quickly. And you'll receive special bonuses when you order, including 1 month of Metastock daily charts or Metastock real-time charts for free. And those are the charts I use in this session. From our ever-popular 7 Steps to Successful Trading right here, our flagship product. Again, how to swing trade successfully, how to trade the trend to profits, a great way to be in the market and take good profits, and disciplined, but without all the time devoted to it. How to read charts, great for novices. 3 winning setups, great for short-term traders. And how to bottom fish like a pro. Once you, these programs can help you earn money quickly and easily, and once you purchase, you have unlimited access to learn at your own pace. So be sure to check them out by going to the link on this screen right up here, or easier still, just click on the orange button below. Until next week, keep green on your screen. I'm Toni Turner, and this is The Market Now.